insured mortgages backed by a government guarantee, reducing the maximum amortization period, increasing the down payment requirements, tightening up some of the credit restrictions. There are some concerns now that I've spoken about, and the Governor of the Bank of Canada has also spoken about, relating to insured mortgages and whether or not we are in danger of developing some sort of housing bubble. So we're watching that carefully. In addition, we strengthened the disclosure requirements on federally regulated financial institutions that offer loans to consumers, including credit cards. Our regulations will mean consumers will be better equipped on their own to make informed decisions. We also limited some credit card business practices last year. Those regulations coming into force now. In our view, there were some practices that were not in the best interests of consumers. For example, there was not consistently a full 15-day grace period allowed, and we're correcting that. We have corrected that by regulation. I've also taken steps to ensure that insurance promotion on bank websites is subject to the same principle that applies to bank branches. We want to ensure the Bank Act reflects the reality of online banking and at the same time ensure both continued consumer protection and fair competition. We're continuing to work on this issue, and in the near future the government will be coming forward with a formal proposal that supports a level playing field for the promotion of insurance products for all insurance providers. We've also We've also taken significant steps to move forward quickly with the provinces and the territories to establish a Canadian securities regulator. This is an old sort of Canadian chestnut, that governments over the years have talked about creating a national securities regulator. We're actually going ahead and doing it. It's been 4 years that I've been working on this. It is a source of awkwardness, if not embarrassment, internationally. When you look at the Canadian financial system, the strength of our financial institutions, both the banks and our 3 large life companies and others, and you look at the integrity of our financial institutions, the integrity of our system, the effective regulation that we have nationally in Canada, how well Canada withstood the test of the past 2 years in credit markets and in the recession. And then we have 13 securities regulators. It doesn't fit the model. We have the Financial Consumer Agency of Canada. President Obama's government wants to create one now, if Congress allows it in the United States. We already have a Financial Consumer Agency of Canada, but we have this regulator anomaly. And I'm really happy to say that the provinces are working with us, most of them, not all of them. And we now have a transition team, which is headed by Doug Hyman, who was the past chair of the British Columbia Securities Commission. We will have the draft act ready, the new Securities Act, ready by the spring. As we've already announced, we will refer the bill to the Supreme Court of Canada so the court can offer an opinion with respect to the constitutional jurisdiction of the federal government on this issue. And then we'll be able, subject of course to the direction of the court, we'll move forward with the Canadian Securities Regulator. But a lot of work is being done by this. We have most of the provinces and territories working with us to accomplish the design goal of a Canadian securities regulator. In October, In October, our government announced that we would move forward with a balanced package of measures that would benefit federally regulated pension plan members, retirees, and sponsors. The reforms we announced will enhance security for workers and retirees while allowing pension plan sponsors to better manage their funding obligations. We certainly had some challenges during the crisis with respect to some of the federally regulated pension plans. As you know, the equity markets have come back to a significant degree, and that has helped alleviate some of that pressure. But there was the most obvious, well-known instance of Air Canada during the first half of 2009 that had very serious underfunding challenges, and we were able to work with the unions and work with the management of Air Canada to create an opportunity for them to work their way through this and not have the company fail and all those jobs lost. We've now created a mechanism in the new proposals that we brought forward so that we could use the type of approach we used with Air Canada in order to be successful again and save jobs were this type of situation to arise again. The finance ministers of the provinces and territories and I are working together. We met in Whitehorse in the middle of December. We looked at some of the research that Jack Mintz's working group had done, some of the research that has been done by some of the provinces on the issue of whether or not it's necessary or advisable to create another savings vehicle in Canada. The provinces have indicated to me that they certainly would like the federal government to take the lead on this, working with the provinces, because of obviously labor mobility issues and so on. We want to make sure that people are not discouraged from moving around the country because there are different plans in different places, and labor mobility is very important for economic success and competitiveness in Canada. So as I mentioned earlier, where we are on that now is we're drilling down on the research, looking at some specific questions. We know, the Canada Pension Plan is successful. It's admired around the world. So the first thing we need to do, in my view, is don't do anything to cause harm to the success of the Canada Pension Plan. Then we need to look at why, for example, some people are not using their contribution room on RSPs. We need to look, I think, at some of the research which would indicate that some middle and lower middle income Canadians are not saving adequately for their retirement. And what, if anything, might be the role of governments or the private sectors? We do have a strong life insurance sector in this country. What are the roles, respectively, that we might undertake? My own view is we have to tread very carefully here. We don't want to do any harm. It doesn't mean we drag our feet, but it does mean we take each step carefully and look carefully at the research and make sure we get it right as we go forward. Now, as this audience knows, investing is a marathon, not a sprint. It requires a long-term focus, not short-sighted hunches. As those bold enough to open their investment statements during the global downturn often found, it is also not for the faint of heart. We live in a different world than our parents and grandparents, an alphabet soup of acronyms, certainly, and an endless array of investment and market theories. And yet we would do well to consider the same traits that served our predecessors so well. Don't make promises you can't keep. Don't buy something you can't afford. Don't invest in something you don't understand. And take your neighbor's financial opinions with a grain of salt. Unless, of course, your neighbor is a member of Advocis. And I thank you very much for that.